Hello traders, the title of the video is how to combine RSI indicator and stochastic bullish divergence like a pro. Let's get started. We are a monthly chart of C-Core Holdings Incorporation. This is an American stock that belongs to the energy sector, oil and gas equipment and services. The EPIC is CKH, Charlie Kilo Hotel. How to combine RSI indicator and stochastic bullish divergence. Alright, the first thing that we want to understand about the RSI indicator is that the ultimate role of the RSI indicator is to identify bullish and bearish financial instruments. So when the RSI is above the level of 50, it's indicating to us that the financial instrument is bullish. And when the RSI is below 50, it's indicating to us that the financial instrument is bearish. So this is the ultimate role of the RSI indicator, apart from the overbought and oversold and the RSI divergence. The ultimate role of the RSI indicator is to identify bullish and bearish financial instruments. Now, the ultimate role of the stochastic indicator is to highlight bullish and bearish divergences. Now, I have on my chart here the stochastic 833 and the RSI period 14. So we want to combine the RSI period 14 and the stochastic 833. How can one combine the RSI indicator and the stochastic bullish divergence? The first thing that we are looking for is for the RSI to stay above 50. So I'm going to call out my level of 50 right here into red. All right. So you can see in the, I want you to pay attention to this section here, that the RSI is above the red line, above the 50. And here it is, the stochastic H33 is now exhibiting a higher low at the time when the price, okay, is forming equal low. Sometimes they may say deep below it a little bit, all right, but I call it equal low. So you can see forming a higher low at the time when the price is forming equal low or lower low. This is a bullish divergence because the RSI is indicating to us that, okay, the magnitude of recent gains are higher than the magnitude of recent losses. But the stochastic also is indicating to us that there is a bullish divergence. At this point in time, we have a high probability bullish trading setup. This is how one can combine the RSI and the stochastic bullish divergence. You have to understand what is taking place here. This is not yet a trading signal. At this point in time, all we can say is that we have a bullish trading setup. One will now implement a top-down trading method or a different time frame trading method to trade it. So for traders who do not know what is a top-down trading method, you're on the monthly chart. So you see this on the monthly chart. This is your trading setup. Your signal will be on the daily chart and your entry on the hourly time frame. If you see this on the daily chart will be your trading setup, the hourly time frame for the signal, and okay, the 10-minute time frame for the entry. So monthly chart, daily chart, hourly time frame. Okay, daily chart, hourly time frame, 10-minute time frame, 4-hour time frame, 15-minute time frame to 5-minute time frame or 3-minute time frame. All right, this is about a top-down trading method, multiple time frame trading method. So I need to clarify this so you can understand it. To avoid divergence trading mistakes, especially bullish divergences, the best time to look for bullish divergences, you can look for it, all right, at the end of a bearish trend or during a bullish progression, a bullish trend, all right. So when the RSI is above 50, it's indicating to us that the magnitude of recent gain are superior to the magnitude of recent losses. The stock intrinsically is bullish. Now one should check the financial. I don't want the video to be too long. Talking about the fundamental analysis, combining the fundamental analysis and and the technical analysis. All right. Once we ascertain that the stock is viable, that we can trade it, pass the Google Asset test, fundamental are solid, market environment good. Now we see the RSI above 50, and stochastic exhibits a bullish divergence. This is a high probability trading setup. The next step, which is very, very important, is to implement a top-down trading method to trade it. By using a top-down trading method, one is controlling a risk, and one is not assuming anything that, all right, this is a high probability trading setup, definitely it will go up. No. You want to handle it like a pro. If there is no signal, there is no signal, and one cannot enter the market. If the market environment is not good and everything aligned, you may decide to walk away. This is the best approach to use this strategy that combine the RSI indicators and the stochastic bullish divergence. As you can see here, it worked beautifully. Is it good for swing trading? Is it good for position trading? Is it good for scalping? Is it good for, all right, day trading? It's good, all right, it's good. All right, you see now? So I have another scenario here. One more time, you can see that I don't like this one very much. You can see how stochastic went almost overboard before forming this higher low. But if you see that this is good, this one higher low, I like this one. It's quite almost overboard here. And if you see that this, put a question mark on it, all right? But this time, if we put a question mark on it, we monitor it, all right? One more time, you can see that it's a higher low with a question mark on it. It's not beautiful like this one, all right? And now we have the price forming, okay, almost equal low again in this zone again, and this is a bullish divergence. But the RSI is not helping us very much because it's tagging. You will see that sometime when the setup is not perfect as this one it is. You can see that this one is not gorgeous. The RSI is hanging around the 50. Now you want to give it a chance. You want to handle it carefully like a pro and use a top-down trading method without ignoring the price structure. There was a small consolidation here, so this is one. It's a little bit tricky now. You see here, it's a little bit tricky to trade this one here. All right, all right, okay. Now there's another one here. Some traders may disagree. It's not perfect also. Here it is. There was this low, but it's not. Now here it's a different one. Maybe it's not bullish divergence. It's a stochastic forming a double bottom chart pattern. And while the prime is exhibiting, okay, a lower low. It's a kind of a bullish divergence. But here, you can see that the RSI is below the 50. So this is not good. All right, it's not high probability trading setup, though it went up. But this one here is a good one. RSI above 50, stochastic 833 exhibits, okay, a bullish divergence. All right, okay. There are more combinations that we can do. There's one here because traders that are following us know that we talk about stochastic patterns. Here is a higher low stochastic in the overbought zone, and the price also forming a higher low. Okay, all right. But the key point to understand, to combine the RSI indicator and the stochastic bullish divergence, RSI doesn't matter whether it's 14 or another setting, should be above 50, and the stochastic exhibiting a bullish divergence. One must now implement a top-down trading method without ignoring the economy news and the fundamentals. All right. If you have any question or suggestion, put it in the comment section. And in due course, I will be recording another video to answer your specific question. We are the TSTW24 traders talking about how to combine RSI indicator and stochastic bullish divergence like a pro. Trade like a pro and use a top-down trading method. Happy trading to you all and speak to you soon.